When people ask me, when is gold going to move, which happens frequently, I say to them, I think it's going to move in the year 2000. In 2000, it was $253 an ounce. Now it's $2,600 an ounce. It's a seven-fold move. It's moved 8.33%, something like that, for 40 years. Pardon me, 26 years. That would seem to me to be a move. Will gold have a hyperbolic move? I'm afraid it will. I hope it doesn't, because the set of circumstances that makes gold do well does very poor things for the rest of your life. And my life, like yours, is pretty good. But yes, I think we're in the early stages of a real gold bull market. If the question goes around the economy and gold, I think it's going to be more of the same. I think there's a lot of bluff and bluster. I remember after Reagan was elected and everything was going to change, there was a wonderful book called The Triumph of Politics that detailed the derailment of the Reagan Revolution by the Washington political process in 3 or 4 months. And I think that's exactly what's going to happen. I think that, partisan conflict will continue. I think that debt and deficits, excessive government spending will continue. I think packing of the court and the bureaucracy by both sides will continue. Americans who believe that they can believe in anything other than their own efforts and the efforts of their neighbors. Americans who believe that any substantive good will come out of Washington will be very disappointed. Think the system constrains people. If you think about what really happens in Washington, legislators are influenced by organized groups where the benefit is confined to that small group, but the cost is diffuse among many people. That's the nature of the process. It's really all about the division of wealth as opposed to the creation of wealth. And sadly, that's going to go on. I think for the next 6 months that Americans of conservative persuasion will believe that things are going to be okay. Their guy's back in the saddle. I think that's a huge mistake. Gold does well when people are concerned about maintaining the purchasing power of their savings. And I think that's a virtual impossibility. There is $36 trillion in on-balance sheet liabilities. $36 trillion. To put that in perspective, the U.S. GDP is $31 trillion. More importantly, there's $100 trillion in unfunded liabilities. That's the net present value. Add those two together, you got $136 trillion. The IRS suggests that the net private wealth of Americans is $141 trillion, which is to say the debt almost exceeds the private net worth of Americans. The only way that you avoid an honest default, saying we can't pay the debt, is a dishonest default where you inflate away the purchasing power of the debt. Charlotte, you're too young to know this, but in the 1970s, we did that. According to the government's own statistics, in 10 years, we inflated away 75% of the purchasing power of the US dollar. Not coincidentally, in that same 10 years, gold went from $35 an ounce to $850 an ounce. Is past completely prologue? No. But like they say, history rhymes. The best answer I heard was that the discrepancy is already being removed for the best companies. And I think that's useful. If you look at Wheaton River, or you look at Agnico Eagle, Alamos Gold, Lundin Gold, they're up between 60 and 100% this year, which is a pretty good move. If you look at people that missed guidance, Newmont, Barrick, they aren't up at all. If you look in the high-performing juniors, the people who are making discoveries, who are delineating discoveries, who are run by high-quality people, when they go to raise financings, the financings are oversold, oversubscribed. I've probably attempted to participate in 25 financings in the last 18 months, and in probably 20 of 25, I've been cut back. So the idea that the industry is undercapitalized is, I think, fallacious. I think that the economic circumstance is less generous with undeserving companies. I think GLD has been a factor of the gold price. But what you learn is, in my experience, bull markets are always led by gold. But then there is follow through on the gold stocks. What we aren't seeing is very much generalist participation in the gold space yet. And the thing that tells me that we're early in a bull market is if you look traditionally, the momentum in gold attracts Wall Street and it attracts Main Street. It attracts the generalist investors to the space. We really aren't seeing that to any great degree. What we are seeing is a changing demographic in the gold space, and that's something that we needed to do. The gold industry investor for many years looked like me, old, fat, bald, white. When I look at my database at Rural Investment Media, who the new people coming in are, they are overwhelmingly over 50, majority under 40. Amazingly, at the top line, over 30% female. There's a demographic in the gold industry that reflects, of course, the demographic of humankind. But there really is a changing face in the gold industry. Perhaps it is that the industry itself is beginning to reflect humankind as opposed to conservative white American males. I think with platinum, because its predominant uses are industrial as opposed to monetary, that you are going to see platinum utilization reflect underlying industrial fabrication demand more. We have at Sprott, the Sprott Fiscal Platinum and Palladium Trust. And while our gold and silver trusts are, $5 or $6 billion products, the Platinum and Palladium Trust is a $300 million product, which will tell me, at least in the United States, that investment demand for platinum and palladium are sidecar markets. There has been a traditional affinity for platinum jewelry and platinum bullion ownership in the Far East, in Korea, in China, in Japan. And we haven't seen a resumption of physical demand for platinum for investment purposes in those markets yet. I'm very attracted to it. I'm attracted to it for probably three reasons. The current oversupply is at least partly due to Russian dishoarding. They obviously need some money, and they had some platinum to sell, and I suspect they sold it. The second is that the current narrative is that the internal combustion engine is going the way of the dodo, and platinum is used to fabricate, catalytic converters. I don't think the internal combustion engine is going away for my lifetime. 71 for reference, and I hope it's a long one. The third is that the production of platinum and palladium are constrained to South Africa, Russia, and Zimbabwe. The possibility of more intense social or political disruption in any of three of those markets is, I think, strong. I'm not saying it's going to happen, but if it did, you could easily see a dramatic reduction in platinum and palladium supplies. And I think because of the importance of platinum and catalytic converters, you'd see no reduction in demand, despite price increases. I'm not saying that's going to happen, but it's a consideration that made me buy a little bit just in case. I don't know enough about Argenta. I know that the deposit is a decent deposit with good grade. I understand it to be currently metallurgically complex and challenged, so people need to do some work on the baseline with regards to the processing technology. Argentina, obviously, as a destination at the top, is improving dramatically. The reduction in government in Argentina means a reduction in bureaucracy. A reduction in bureaucracy is always good. The new president, Milei, said he wants to remove the roadblocks for resource development so that resource development can begin to benefit the Argentine people. So in a variety of industries, including copper, agricultural minerals, and of course, oil and gas in the Vaca Muerta, there has been a real sense of progress at the federal level. People need to understand that the regions in Argentina may not all be as pro-mining as the center is now. Well, you're seeing lots of development in Salta, in Jujuy, in other provinces, Santa Cruz as an example, there isn't as much forward momentum. So we'll just need to see. The easiest for me, and we talked about this late last year, the silver juniors were stupidly oversold. People just hated them. And I think I described them, talking to you, as a coiled spring. And that trade happened. The better silver juniors are uniformly up 200 or 300%. before there was a silver bull market. It happened just because they were so oversold and they were so hated. That worked. Less well known, but of more benefit to me, frankly, has been the performance of the very best gold stocks. The Wheaton Precious, the Agnico Eagle, even Franco-Nevada, which was punished, of course, by the nationalization of Cerro Colorado. The operating performance of Franco-Nevada, the margins, the free cash flow, has been dramatic, and the market has started to notice that. I think the other theme for 2024 that I think continues and accelerates into 2025 was the gradual realization among the investment community that oil and gas is here to stay. The oil prices didn't go up, but the operating performance of North American oil and gas companies, particularly Canadian oil and gas companies, hobbled by low energy prices and hobbled by a hostile federal government, the operating performance has been fantastic. The share price performance has been less fantastic because the oil and gas narrative isn't strong, and the anti-oil and gas political narrative, particularly in Ottawa, is very strong.
In this video, we explored the compelling case for gold's incredible long-term performance and its potential hyperbolic future. From its 7x rise since 2000 to the economic and geopolitical factors driving this momentum, it's clear that gold remains a critical asset in uncertain times. We also discussed the broader implications of debt, inflation, and how shifts in the financial and industrial sectors are shaping the future of commodities like platinum and silver. Now that you understand why gold and other commodities are poised for a massive breakout, you're going to need to know about the next major economic shift that could completely reshape global markets. Watch this important video next to stay ahead of the curve. Don't forget to like, comment, and subscribe for more insights like these.